who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 31st day of August, 2015. Let's take a quick look at the numbers. All right, here we go. U.S. markets, starting with the Dow. These are cash markets. We are down 43 points. S&P is down 6.5. NASDAQ is down 13. And the Russell 2000 up less than a point. Crude oil. Now here's the big story of the day, and I'll show you a chart in just a moment. In fact, while we're talking about it, might as well take a look at it. Crude oil. Our alert last night was to be short below 44.60, and if the opportunity presented itself, to be long above 46.10. $1,000 move to the downside, and in the past hour, $1,000 plus move to the upside. So that's how crude oil came to be up $2.29 on the day, or 5%, 5.06%, 5.24% to be exact. Okay, Asian markets, the Nikkei down 245, Shanghai down 25, and the Hang Seng up 58. European markets, the DAX down 39, FTSE up 55, and the CAC 40 down 22. So those are the numbers. Hope you had a great weekend. Hope you had a chance to spend some quality time with your family. I saw you in church yesterday. Yes, I did. I meant to speak, but, you know, so many people. Anyway, glad to have you with us this week. Start of a new week. Will it be more of the same? Well, I don't know. Define the same. Is this the new normal? I don't know. If you can't see the chart I have up, you could be new. So, for those of you that are returning, welcome back. For those who may be here today for the first time, a special welcome to you. If you want to see the charts during the show as well as hear the broadcast, go to our homepage at CFRN.net. On the right hand side of the page, click the big microphone. Follow the instructions. You'll be registered all the way through the end of the show. Tomorrow is the first day of September, and so everyone has to register again. That's right. We trade on the first day of the month. We trade 30 seconds for roughly 30 days. So if you're new to the show today, you'll have to register today, and then you'll register again tomorrow, but then you won't have to register for 30 days. You'll get an email each day that has a link in it, and it will remind you the show starts at 12 noon Eastern. When you're ready to join, click the link. You're in like Flynn. Okay? Alright. Yellow line up on the chart, S&P 500 Emini Futures. What's that all about? Well, as in most things market, if you're looking to solve a problem or answer a question, much can be learned by looking left. Okay? Last Sunday night we had a gap lower open, as we did last night. Okay? We gapped lower last Sunday night and ultimately worked our way down to the lowest weekly trading zone for it's now last week. Okay? Alright. And then we did a bit of bouncing. Invasion of the giant candles. We had drawn this across like so, because resistance, resistance, resistance. We thought if we broke through that on a pullback this could be good support. And we discussed that in depth on the show last week. Now the yellow line, this represents exactly where the gap closed last week at 1968.25. It took all the way to Thursday to finally close the gap. Okay? Thursday was the 27th, and so it was in the 9 a.m. hour on Thursday that we finally closed the gap. So if we draw a horizontal line from the gap close from the previous Friday's close to the gap close, and if we extend that out to the right, what do? We catch Friday's low. See how that turned into support? Now again, the yellow line goes from previous Friday close. We had a gap lower open all week. Everyone's wondering, will we go up? Will we close the gap? Well, we did. So we drew a line to highlight where we closed the gap, and then the market came back to show us the importance of that on Friday by spending 1, 2, 3, 4 hours trying to get below it, but it held as support. We closed out Friday at 1986 and a quarter. We then opened last night where? Right back at this same area. 68 and a quarter is the yellow line. The open last night was 67. And so we spent most of the overnight session, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, broke away a little bit here, pull back, and it's just in the last hour that we really made a good effort to pull away and do what? Go ahead, say it. Close the gap. Because we have a new gap close now to deal with, right? So, now, we aren't big gap close theorists. We don't have any trade setups that are based off of that. We always pose the question, does the market need to close the gap, or do the participants in the market need to close the gap? So the close on Friday was 86 and a quarter. Okay, right below the weekly zone at 90.91. So 86 and a quarter. Make sure that's where we closed. 86 and a quarter. Okay. So we'll draw a little line. Try to make it straight. We'll go up to 86 and a quarter. Right there. We will turn that yellow also. Why not? And we'll send that off the hard right edge. Why not? And there we go. Okay. This is what it will take. 1986 and a quarter. This was 1968 and a quarter. This is 1986 and a quarter. I know that's lost on most, even me, but there's something there. What? I don't know. Swing high so far. 83.75. So have we officially closed it yet? Well, not yet. But do you find it interesting that we gapped down to what we had highlighted as what we felt to be an important area and bebopped all these hours, and we may not be bebopping? So that's the story on the S&P 500 Emini Futures, and it is how we came to be down at the moment, less than 0.5% on the day, down $8.38, 8.01 fresh print. Okay, but that's the cash market price. So with that said, let's get into today's program. We'll take a look at the chat box. Looks like we got a lot in here. Wayne, I heard on Friday that Mexico hedged all their oil output for 2016 for $49 per barrel. So this person said $49 should be a magnet for oil. You know, that's interesting, John. I had not read or heard that. So let's take a look real quick at that crude chart again. This is October crude. Okay. And so the big run up took place in the 11 a.m. hour, but this is news that came out back on Friday, and you're saying that 49 based on that should be a target. Okay, that makes sense. So again, I didn't read the news, but John B is bringing us that on Friday Mexico hedged all of their oil output for the entire year of 2016 at $49 per barrel. Interesting. Thanks for sharing that with us. Okay. All right. So let's get this show on the road. Now, first Michael will come and he will do a recap of everything that happened in the live trading room today. Had a great day. If you've not spent time in the live trading room, I encourage you to come and see what we've got going on. Okay? We may not be the tallest, the fastest, the sleekest, but we're consistent and we're transparent. We trade with both hands on top of the desk. We deal off the top of the deck. We record every day, audio and video, every trade taken, every word spoken. So there's never any he said, she said. It's just all, right there on tape. Yes, I know I don't use tape, but it's recorded, digitally archived, as they say. Why? Well, what a great movie that will make someday, when you can sit down and watch, let's see, 3 years of live trading room videos at 2 hours. Let's see, with an average of 200, we'll just say an average of 200, 600, 1,200 hours of live trading. Wow. Anyway.
That's a lot.
That's a lot, right?
Yes, it is.
Okay. So, as Michael comes on, he'll walk you through, as he always does, how to take the free trial. When you take the trial, it's really important that you download the platform and install the indicators. Otherwise, you're just watching Michael trade. And at the end of the week, you'll go, well, wow, that guy's a pretty good trader. Well, we already know that. Question is can you do what we do? The only way you'll know is to get your hands on the indicators. If you already have the Ninja platform, our indicators will work there. If you don't have Ninja, then download the DT Pro demo. Comes with a $50,000 demo account. It's fully functional, live data, real time. Our indicators work beautifully there. It's the platform they were created for. So you'll be able to watch Michael 2 hours a day. This isn't about being a trade calling service. This is about teaching you how to trade. This is about teaching you to not need Michael or me or anyone else for the rest of your trading career. It's about you standing on your own 2 feet, trading the markets as you see opportunity present itself. That's what it's about. So I encourage you, during the trial, watch, listen, ask questions, and then go practice what you've learned. You have 22 hours before the next class starts. You get 5 of these 2-hour classes. So when you come back for the second class, you should have some really good questions, because you've been out there bopping around, trying to remember, oh, what did he say to do here? Okay, when this happens, what am I supposed to do? You write all that down. You bring it back to class the next day. Now, this is class in live markets. Okay, we trade real money in real time in front of real people. Okay, that's important. A lot of what you see out there is not real trading. Okay, read the fine print, read the disclaimer. It does make a difference. And also remember this, that anyone can look like a genius with a historic chart. Every time I bring out a historic chart to show you, I remind you of that. Okay, after the fact, it's easy to paint a pretty picture, but it's what's set. See, the one thing you cannot fake is a live chart. Whether someone's really trading that live chart or not, well, that's a whole other question. But again, that's why we tape everything that we do, because we strive for integrity. It's sorely lacking in this industry, I hate to say. So that's why we take the extra step to give you the confidence that what you're seeing is what's really going on. So With that, Michael, take it away.
Okay.
And show them how they take that free trial. It is free. There's no credit card required. If you want to take the Concierge Trade Alert trial, that will cost you all of $1, okay? And there's a special link for that. If you need that link, email support@cfrn.net. When Michael's done, I'll be back with a good word for the day. We'll take a look at some Concierge Trade Alerts from last night. We'll talk with David from pagetrader.com. And then our Monday co-host, Garrett Jones, will be with us to talk about the middle of the road. It's all yours, Michael. I'll hit mute.
All right. Got it. All right. Good afternoon, everyone. Today is Monday, the 31st day of August, 2015. If you have not taken a free trial with us, go to CFRN.net, and in the right-hand column, put in your name, put in your email, click on Register for a free trial. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link. Once you do that, you'll be sent all the information you need to take our free trial. Okay? Everything you need for a free trial. Today, in the live trading room, we had a pretty good day. Here, we'll just go down to the bottom of our spreadsheet. It's the last day of August, and the last day of the best month of the year for us so far. Alright. Today's results put us up to $7,200 for the month. That's good. Where do I keep the recap of the live trading room at?
I typed it in for him.
Okay, yep, I see it. And ready to get to the spreadsheet, if that's what you're looking for, you go here to view live trading room results, click on that, then right here, view our spreadsheet, click there, and that will bring you right to the spreadsheet. Okay? Alright, speaking of the spreadsheet, today we were plus 10 on soybeans, plus 7 on the Russell, plus 37 on crude, plus 14 on gold, and minus 8 on the euro. Okay, it took us 5 minutes and 1 trade to get to our goal for the day. Yeah, this is all just the live trading room. 5 minutes and 1 trade to get to the goal for the day, and we took a total of 24 trades today. You can see on the month we are now up $7,200 for the month of August, and that's where we're going to wrap it up on the month of August. That is our best month of the year. The prior best was $6,835, so we beat it by just about $400. In 21 trading days, we're averaging $342 a day, and yeah, if you apply an $8 commission to every trade we've taken, you would be up $3,816 net. If you applied a $5 commission to every trade we took, you'd be up a net profit of $5,085. Okay. We traded 161 days so far this year. We're up $41,735 per contract gross, and that averages out to $259 a day. John, I wasn't looking at it at that time. I was not looking at the markets at that time. Okay, so that is all that. Now, I'll bring the ES out and show you the ES. We didn't actually trade the ES today because the Russell was tradable, but I don't know if I pointed out. Yeah, I guess I did point out a couple of trades here on the ES, a short here and a short here on the ES. Okay, there was a long trade right in here on the ES, another one right there. Nothing in here. Yeah, nothing in there. And a long trade in here. And here, up into the zone. Then it came back down out of the zone. This is all during the break now. Just a momentum trade in there. Was all there was. not a lot of stuff in here. One last long trade right here, back up to the zone. That was it on the ES. Okay, gonna move that off, and I have gold. Today in gold, we had a few trades in gold. We did all right. Started out right here. Our first trade in gold, we made 7 ticks profit. All right, our second trade in gold, 7 more ticks profit. And then we had a break-even trade right in here. Let's see. During the break, we had a nice movement here. There's a trade there, 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 and there. And actually a short trade right there. Another short trade developing right now. So gold was pretty good to us today. We had 14 ticks profit in gold. The next one is the Russell. We had quite a few trades in the Russell. Nice trade right here for that move up. This was a bounce off the VBC. Blue cycle above the green line. Everything fit on that one. Yeah, I was back and forth a little bit today on the Russell. I ended up +7 on it, but I was back and forth a little. Okay, so we didn't get any of the trades right through here. All right, not that one. And our first trade over here on the Russell, we got 11 ticks profit on. All right, the next trade we got 10 more ticks, putting us at 21. Then we lost. We got a break even, another break even. Hang on, we're missing something here. 21, and a break even, a break even. And we lost here, going from 21 down to 13. Break even there, we lost there, going down to 5. But I didn't count this win right here, whatever that was. And then from 5 we went back up to 7. So I missed this trade right here. I didn't count. So it's probably an extra 10 ticks. Yeah. Anyway, it's all good. During the break, we had a beautiful long trade right in here. Re-entry spots were there and there. And shorting opportunities. Here, 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 there, and there. And that was pretty much it. So on the Russell, we ended up +7. For the record book, we say +7. It was actually more than that. Crude. Now I get to see that movie we were talking about in Crude there, John. All right. Wow. Yeah, from 11:30, it moved from way down here at 45.66 all the way up here, 48.09. Let's say 48.06, just for argument's sake. And so 40, we'd put it at 46, 47, 48, yeah, 240 roughly. Awesome. All right, well, we had +37 on Crude today. So let's just start out with what we had. Our first trade of the day was right here. We took 10 ticks profit on Crude. We had missed this one, that one, and that one. We ended up stopping out on this one right here on Crude. That put us back down to 2. Had a break even there. We got 15 on this trade, put us up to 17. And 20 on this trade, put us up to 37. Okay. I missed this one. And then that was the end of the live trading room. Now I'll blow it up just a little bit. There's a lot of stuff happening down here in the slingshot. It was all over the place until it got right here. Okay, right here it became tradable with the slingshot. So there was an opportunity there, and there, and there, and there, and there. And then it had to reset the slingshot, so you didn't have anything in through here. Actually, you did have a short trade right there. Long trade there, another long trade there, and over there, I'm not going to go through every single one. There are just, let's just suffice to say, there were probably another 20 trades in there. Okay, right here at the end, there was a short trade there, a short trade here that would have stopped you out, a short trade here that would have gotten it back for you, another short trade right here that you'd still be in. Okay, matter of fact, maybe I'll get in. It would have been right there at 47.40. Okay. All right. That was crude oil. We were plus 37 ticks on crude. Okay, plus 37 on crude. Soybeans. On the beans, let's see, we had, yeah, just a few trades in here. We had a break-even trade here. We missed that one. Had a break-even there, a break-even there. And we made 10 ticks profit on that one. Okay. There was a mistrade there, a mistrade there. And then we were in a break right here. Mistrade there. And that was it. We ended up with 10 ticks profit on the soybeans. Okay. And on the euro, yeah, we just had the one trade right here. An 8-tick stop out on the euro. Okay, there was one opportunity here for that big move down, and then one more opportunity here, and that was it. Euro flattened right out at the end of live trading room. All right, so we are going to wrap it up by bringing up our spreadsheet. Now, everyone that is in here that wants to get in here tomorrow, you're going to have to go back out to the website tomorrow. You're going to have to go here to click here and watch live now. Click there and fill out this little form. You're going to have to do that tomorrow, okay? Because today is the last day of the month. If you want to take our free trial and you have not taken our free trial, you just go to the homepage at CFRN.net, put in your name, put in your email, click on register for a free trial. You'll be sent a confirmation link. You have to click the confirmation link. Okay. Our recap again. On the day, we were up 10 here, 10 ticks on soybeans, 7 ticks on the Russell, 37 ticks on crude, 14 ticks on gold. We lost 8 on the euro. Took us 5 minutes and 1 trade to get to our goal for the day, and we took a total of 24 trades today. On the month, we are up $7,200 a month, $7,200 a contract this month. That's in 21 trading days, averaging $342 a day. On the year, we're up $41,735 a contract. That's in 161 trading days, averaging $259 a day. Okay, so we blew away our daily average for the year this month. Last month we had a pretty good month too. We were up 303 last month. So you can see this number over here is getting bigger and bigger, and next month, if we were doing this add 1 contract per month thing, we'd be on our 9th contract next month, and we'll see how next month grows. Okay? With that, guys, I'm going to wrap it up, and we can head back out to Phoenix, Arizona. If Phoenix is on the line.
Oh, yeah, right here.
Okay. Good.
All right, recap of the recap.
It took 5 minutes and 1 trade to get $200 a contract today.
People go, wow, $100 a contract. You do all of this to do that? Okay. $100. That's a key number for us. It's round. It makes it easy to add and subtract. As you increase the number of contracts that you trade, which done properly you do with profits that you earn in the market trading, which is why once you qualify to go live with us, after you spend your time in the simulator proving your consistent profitability, we want you to increase your account balance by $2,000 before you add a second contract. It's a pay-as-you-go plan. Then after a period of weeks, we then go to a calendar method, and after a period of weeks that you've not run off in the ditch, you'll get to add a 3rd contract. The point of the 2420 blueprint is to show you a method where you could go from one contract to 20 contracts in a period of 24 months. Now, in so doing, when he says, 5 minutes, one trade, $100 per contract, is that what it was? One trade? Yeah.
Yes. Yep.
Right. Now, it's not that simple. It's not that cut and dried every day. That goes through the spreadsheet. You'll see exactly how many trades it takes us on any given day, and some days it takes a few. Okay. But that same trade today with 20 contracts would have been $2,000 gross at the 20 contract level. Okay. Of course, you got your commission, your expenses, and what market were you trading?
That one was crude oil.
So crude oil, that is a market that will support trading 20 contracts. Will there be some slippage? Yes. Anytime you trade multiple contracts, you're going to get some slippage. That's just part of the deal. Alright. Let me go back to that crude chart I had up again. Real quick.
Okay.
Here it is. And here it is. And so, insert volume. Alright, during the 9 a.m. hour, which would be when Michael took that trade. Oh, that's gold. Let me find crude. There we go. In the 9 a.m. hour, that's this candle right here. Let's put some volume on this chart. Find 9 a.m. again. There we go. In that hour, there were 67,198 contracts traded. Now, last hour was 150,000, and I'm supposing that's, has a lot to do with the news John B. brought us, but that news was released on Friday, and so why it didn't take effect overnight, although we had a $1,000 per contract drop last night. Right here we can see short below 44.60. Took us down to a swing low of 43.60. It's exactly a $1 drop, and a $1 drop in gold is $100. In crude it's $1,000. Now they both pay $10 per tick, but gold has 10 ticks to the dollar, while crude has 100 ticks to the dollar. $1,000 drop. The rally to the upside, 1,000 plus. Did it tiptoe into the 2,000? Let's see. 46.10. There's 47.10. I don't think we have 48.10. We have 48.09. Okay, so we came within 1 penny of it being. Now that's volatility. $1,000 per contract to the downside, and then within a penny of being $2,000 per contract to the upside. That's a big day for crude oil. All right. So my point is this: $100 per day sounds like a humble beginning. Well, I read a book one time. It said, "Despise not humble beginnings." That's where so many people get themselves into so much trouble so early on, is they take on more than their skill set allows for. Well, I've got the money, so let me just trade a lot of contracts. Well, that's a good way to not have a lot of money. Okay, if you build your account size, and that's the beautiful thing, you don't have to have a huge amount of capital to get started. Unlike stocks, where you have to have a $25,000, $20,000 or $25,000 pattern day trader minimum account balance to day trade stocks. That doesn't exist in the world of futures. And if you're going to start trading one contract, whether it's if it's one of the indices, which is $500 margin per contract, well, about $7,500 is sufficient. Really, you can do it with a lot less than that. If you want to trade 10 contracts in the S&P, that's when you need about $7,500. If you're just going to trade one contract and you don't need more money in the account than is necessary to cover the amount of contracts you're trading and whatever drawdowns you might have, and of course stop outs. That's part of the business. If you're still on that search trying to figure out a way to not get stopped out, that is a very long and arduous journey. It's very expensive. If you just will accept the fact that you're looking for a black cat in the dark that doesn't exist, and instead accept the fact that being stopped out is part of the business, and once you incorporate that into your business plan, well, hey, I mean, it's not a surprise, it's not a kick in the gut, it doesn't turn your world upside down, it doesn't make you question whether you really have a skill set. You understand that it's just part of the day. Now, will there be days where you step in, put on your first trade, it runs to target, and you're done? Yeah, those days will happen, right? But you don't look for that. Don't count on that. Don't pin your hopes on that. On the day it happens, accept it and move on. Most days, it'll take you several trades to get to your daily goal. That's why the blueprint allows you 10 trades per day, plus any rollover trades you have from previous days. So with that said, the S&P seems really quiet here. It hasn't moved much since the open of the show. When we opened the hour, we were at 77 and a quarter, and we've been all the way up to 81.50. Boy, now that would look, this is starting to look like the invasion of the giant candles. Maybe winding down. So we won't pronounce its demise too early. We'll wait and see. We'll see what the day brings. Let's go to our good word for the day. Let's see what that has to say. This comes from Acts 5:29. We ought to obey God rather than men. The full scripture, then Peter and the other apostles answered and said, we ought to obey God rather than men. Okay? Now, some of us are people pleasers by nature. Okay? Some of us could just give a rip what other people think. But many of us, are really concerned about pleasing people. And this can cause us problems in all areas of our life. Too often our actions are dictated by a misguided need to please others. We care so much about what they think that with every step we take, we look over our shoulder to see whether they're smiling or frowning, whoever they are in the current situation. Okay, at the office, it could be coworkers, it could be the boss. At church, it might be the guy on the board with you, or the pastor, or in your social group, it could be anyone, right? So who is the they in your life that you're trying to please or impress? I think those two kind of go together. Understand this, if you're always looking for people's approval, you're not looking where you're going, and eventually you'll hit a wall or trip over your own 2 feet. The Bible says we ought to obey God rather than men. What do you think will happen if you open your mouth and stand up for yourself? The truth is that people who don't respect your rights and honor your wishes, well, they just are not worth your time or effort. Nor are they worthy of a long, drawn-out discussion. Just say goodbye. Now, we're not talking about marriage or children. That's a different issue. When the land became too small for the flocks of Abraham and Lot to graze together, strife broke out. Abraham loved his nephew Lot, but he realized that he could no longer live in this situation, so he took the high road and said, "Please separate from me. If you take the left, I'll go to the right. And if you go to the right, I'll go to the left." Now, the elder should have had calling rights, but he didn't. He said to his nephew, "You choose whichever one you want. You can have it. I'll take the other." Okay? That's Genesis 13:9. "Is not the whole land before you? Please separate from me. If you take the left, then I'll go to the right. If you go to the right, I'll go to the left." How does the story end? Well, Lot chose the best grazing land close to Sodom. And as a result, everything he worked for went up in smoke. But Abraham, who always sought to please God and not man, ended up not only being blessed himself, but being a blessing to the nations of the world. So the word for you today is, God wants to set you free from people pleasing. Instead, focus your efforts on pleasing Him. And if you make Him happy, nothing else matters. And that's our good word for the day. All right. S&P 500 E-mini Futures. Gap lower open. That's 2 Sunday nights in a row. Okay. Now, remember this lower gap wasn't a huge one last Sunday night. Just, average, new normal. Last night's gap was significantly larger, but the follow-through was much different. Okay? Let's take a look at this. Okay. So here's the S&P 500 E-mini Futures. We had an alert to consider being long above 1974. Okay? 1974. This first move up took us to 77 1/4. So that was 3 1/4 points. How many points do we need to be done for the day with the S&P? The answer is 2. We need 2 points. The next move up took us to 76 1/4. So that was 2 1/4 points. This move here only went to 74.75. And then the hour closed here. Okay? We would have to go to a smaller time frame to see if from this point price ran higher or lower. Perhaps we can do that in the after show. No doubt in this hour where we opened here, price ran all the way up to a swing high of 77.75, so that's 3 3/4 points. And in this hour we ran up to 76.75, 2 3/4 points, and in this hour we ran up to 83.75, which would be 83.75. That would be 1 tick shy of 10 points. 9.75. Okay. Now we had some triggers on the south side as well, and the south side trigger was 63. Okay, now that one didn't fare quite as well. Let me show you exactly what it looked like. 63. There we go. Alright. Was that 63? No, that's 63. Okay, we get a swing low here of 61 1/4. So that's a tick shy of 2 points. And here we get a swing low of 62.25. So that's a 3-tick move. Okay, it's at 4 ticks we take our stop to break even. If you traded this on the short side, you took the entire stop out here. Okay. Bonds. 30-year bonds. The alert said, consider being long above 155.23 or short below 154.19. So the 154.19 short side, not an issue. The one we're looking at is the long side. That's what triggered 55.23. And so here's 55.23. And let's see, the first swing high here is 155.29. And so that would be 6 ticks. How many do we need to be done for the day? We need 4. Okay? And so 155.23 up to the swing high at 156.08. So that would be, let's see, 23 and 9. That's 17 ticks. This move here was good for 17 ticks. It's 32 ticks to a point. It pays $31.25 per tick. That's why you only need 4 ticks if you're trading the 2420 blueprint to get to your $100 per contract per day. Okay. Crude oil. That's the really big story of the day. Okay, this first drop, okay, this first drop took us down to 44.40. That's 20 cents. How much do we need to make the $100? 10 cents. Okay, so the first drop was 20 cents. We need 10. Important prices, important areas, they get tested, and so we end up putting in exactly to the tick a $1 drop, which in crude oil is $1,000 per contract. And then seemingly out of nowhere, we trigger long up here at 46.10. Okay. And right there, that's a $1,000 per contract mark. Now, this was a pretty fast and furious move on 150,000 contracts. And 48.09. So we're still 1 penny shy of this being a $2,000 per contract move. Okay. Soybeans. Short below 878. No trigger on the long side. We got to 77. Okay. That's 4 ticks. We move our stop to break even at 4 ticks. We did not hit the 2 penny. We need 2 pennies in soybeans. It should be done for the day. That did not happen until the 8 a.m. hour. Off the trigger at 7 a.m., ultimately at 8 a.m., and then at 9 a.m. we continued to drop. We put in a swing low down at 71. So that's a 7-cent move altogether. And our long trigger on soybeans was up at 890. And so no danger of triggering that at this point. Now here's the Dow. Okay, the Dow was long above 16,550. Let me move this out of my way. Come on. There we go, 16,550. Okay. That's an 8-tick move, right? We need 20 ticks to be done for the day. First trigger was on the short side. down at 16,445. Okay, 16,445. Now, the swing low was 16,430, so that's 15 cents. Over here, we drop down to 16,1418. So from 16,445, 45, 25, a 27 point drop, 27 points. Okay. Here, we made it all the way up to, so this was 15, this was 550 up to 606, so that's 56 points. So again, what does it take to be done for the day in the Dow to hit the $100 mark? 20 points. Okay, so we had a 15 tick move here, an 8 tick move here, 20, let's see, from 45, so we had a 22 tick move there, and then a 56 move, 56 tick move there. Okay, we still have gold to look at, which had a trigger at 11.28, and that dropped to 11.25. So that's a $3 move in gold, which is $300 per contract. The euro I have not calculated yet. We'll do that later in the show, as well as the Russell. We'll take a look at the Russell. But it's time right now to head to Vegas, so let's do that without any further ado. Talk to David from Page Trader and get his forecast from the Edge. We're going to pause for a brief station identification, and we'll be right back, so don't go away.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
On your way. I thank the Lord for love like ours that flows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you more today than yesterday.
Good morning, Dwayne.
Hey, David, good morning. Welcome to the show.
Thanks very much. It's a real pleasure to be here. Hope everyone's having a decent Monday, and I hope everyone had a pretty good weekend as well. Pretty hot here in Las Vegas for the weekend. I'm sure you probably had some high temperatures as well.
Man, oh man, it was so hot. You wanted to go outside, but you just didn't know if you could actually make the run to the car or not.
Mm-hmm.
You know, and survive. And so you just stayed inside. You just said, I'm not even gonna attempt it. Let's see how bad was it really? Well, it's a pleasant 91 at the moment. It's going to get up to 106. Not so bad. I guess this thing doesn't scroll backwards, but it was, I don't know. We were driving in the car. It was 114, 115.
Oh, you did have that high.
117, yeah. It was really hot over the weekend. And then we had a little bit of rain last night. Blew up out of nowhere. Crashed hard. Sounded like hail hitting the window. I don't think it was. I think
Really?
It was just
So you had a really
rain.
hot day that turned into a monsoon storm.
Yes, sir.
Wow, that's
True
pretty
story.
impressive.
Yeah. Yep, we get it. This is our time of year, our season for
Yeah,
real.
August is your monsoon season for sure, I think.
Huh. Weather. No. Huh. Where did that man learn how to trade? I mean, spell. All right. So let's see. Does this doesn't tell about yesterday either? Guess if you want historical data, you probably got to pay for that. You got to download it somewhere. Probably send it to you on a disk. It doesn't matter. It's hot. Anytime it's over 100, it's hot, and so I don't even. International panic alerts. So it doesn't have a yesterday. It's got a today, but not a yesterday's forecast. National forecast. Yeah. So anyway, we'll just leave it at that. It is really, really hot, and I'm really, really glad it's not going to be quite that hot today.
Well, there you are. I want to remind everyone that might be looking for, in fact, anybody, including you, Dwayne. I don't think you didn't upgrade your car yet, right? You didn't purchase your van or whatever. That the 2016, I know you didn't come here to hear this, but you're going to hear it anyway. The 2016 Chevrolet Volt, V-O-L-T, is, you can place your order for it now. It'll be out in the fall. This is the best car of all of them with regard to the electrics and the hybrids and so on, the Chevrolet Volt. I owned one, or leased one, for 3 years, and the first iteration of it was fantastic. It was like driving, it was like nothing else I'd ever driven, and it's really what flipped me into the electric car driving, which once you go there, you never come back. People don't drive electrics and then come back and say, no, I think I want one of those piston, vibraty, smelly piston things with a lot of parts to break. So the Volt, the new version, the second version of the Volt, comes out in just about a month and a half. It'll start appearing at dealerships. Do yourself a favor, if you haven't driven one, go check it out. The car gets over 100 miles per gallon. And the average person on this particular Volt will go 1,000 miles or more between fill-ups. If they're driving more than 55 miles a day, they'll go 1,000 miles between fill-ups. If they don't drive more than 55 miles a day, they'll go thousands of miles between fill-ups. Thousands. Just depends on how far you drive, because the first 55 or 60 miles now in the new Volt is pure electric. And I've been singing the praises of General Motors and this car since the beginning. General Motors makes the best electric car on the market. Now, if you say, well, what about Tesla and so on? Tesla makes a great electric car, and in fact, it's the fastest of all of them. But Tesla still has reliability and other issues, although they take great care of their customers to no end. I mean, the company has the best of everything when it comes to customer service, but they're still working through some, and this is no discount to them because this company came out of nowhere. The cars are, average reliability, where the Chevy Volt has the highest reliability of any car rated in the history of Consumer Reports. It's got a 99 point something. So although it is a complex machine, it'll allow you to do...
Didn't Tesla break some consumer things just last week?
They did. And that was them rating it their highest car as a car, not reliability, though. That's their... And it is. It's a I've driven a couple of them now, and they're just fantastic and amazingly quick and all that. I have nothing but good things to say about them. But as it sits right now, the very best and most reliable electric car that allow you to get the best of both worlds, where you can drive most of your driving on electric, and occasionally when you have to go further than that, you don't even have to think about it. The gas engine turns on. It's a generator. It's not turning your wheels per se. It's actually generating electricity, and the car stays electric, but they're burning gasoline to run the generator to keep your car electric, and it just seamlessly goes into that. And this one is much more efficient. The 2016 is the second generation, so it's much more efficient. It's faster. It goes longer on electric. It gets better gas mileage overall. I mean, it's a fantastic thing. So if you're checking out cars, make sure you stop by your Chevy dealer and check out the Chevy Volt, because it's no joke. This is a space-age machine that everyone else is trying to catch up to. It's that good. So I know the stories of GM and I know their problems and all that stuff, but their engineers that put this car together are second to none. The Germans haven't beaten it yet. The Japanese haven't beaten it yet. The other Americans haven't beaten it yet. GM has the best electric car on the market. It's the easiest for any of us to just jump in and drive and just use it like a regular car, because when it runs out of electricity, it just keeps on chugging, and you've got it starts acting more like a Prius then. It switches between the generator and the electric battery, and you just keep going. So there's no compromises with
You think the day will come when, like now, if you want to go ride a horse, you got to go out to the stable and rent one, and the guy kind of leads you around, and you can, I mean, do you think the driverless cars will eventually take over, and it will be deemed so safe to be in a driverless car that, like, if you want to actually drive a car, you have to go out to like a track and you pay so much per hour, and they let you drive one of those old-timey cars around and around the track? You think that might come in 50 years?
Much less than 50 years.
You think?
That is coming. Absolutely, that is going to come. And the driver aids, most people are not aware, even people who purchase new cars, at how many driver aids are already on their cars, and they don't understand what they do.
Because I was watching AMC On Demand yesterday, and they just kept playing that commercial over and over and over about their crash protection, to an extra set of eyes, and so they're zipping along at like 50 towards a brick wall, and that thing it stops. Itself.
There's a whole bunch of things that new cars do. One of them, and some of you may own a car that does it, which is radar-based traffic following another car, where you radar-based cruise control. So you're driving along, you set your cruise control at 60 miles an hour, but if the car in front of you starts to slow down, your car will automatically start to slow down as well, and it'll slow perfectly in sync, and it can even slow very sharply, all the way down to a crawl, and then when the other car starts to speed up again, your car starts to speed up again as well. It remembers the number and that you've set it at. And so if you're in stop and go traffic or very slow traffic, you put it on and it'll just drive for you. And then you have lane assist, where many of you that own a car probably have this, but you don't know it, which is that you can flip a switch and your steering wheel will correct for the lane. So if you start swerving into the lane, it'll actually correct and drive the car back into the lane. It'll actually turn the wheel for you and put you back into the lane, because it's checking the lanes. There's a whole bunch of others, a whole suite of features that are out there already, and that's the beginning. And we're going to have 5 to 7 years of that type of autonomy, that level of autonomy, and they're still working on the fully autonomous car, which, believe it or not, will have no steering wheel. I mean, maybe the first versions will have a backup, but there's no steering wheel in it. It's completely computer control. It's a very weird,
That's a little bit freaky.
World.
Know,
you put your date and your time or whatever place you want to go in, and
you see yourself headed for a crash or a collision, and there's no way you can manually override that thing and take control.
Well, there may be some way you can override it. I don't know that, but a couple of the reasons why it's for sure coming is because the roads are getting more crowded. And just this one thing alone, when cars can communicate with each other, and there's all that software and stuff running in there, you can have cars driving on the same piece of road and put a lot more cars on it, because the cars don't need the same distance between cars as they used to, because your car can react instantaneously to the car in front of you. The roads are used much more efficiently, and there's less traffic jams. People will get used to doing work in their cars.
Because when you get caught up in gridlock and like you're on the freeway but traffic is backed up, it's at a crawl, and you keep thinking you're going to finally get up to the place where there was the accident or something.
Right, and it never arrives.
And there never was anything. And so do you think it will help that or change that?
Well, I do. I think it'll change a whole bunch of things, that included, but accidents will be dramatically reduced because there's no human error anymore in it. It's actually cars speaking to and seeing other cars, and they have the technology now. But I think realistically, you are 20 years out from this point forward, not to seeing the cars. The cars will be out before then, but you're 20 years out before it starts really becoming adopted by any large number of people. It may come sooner than that, but it's a long ways off. But you will see more and more autonomy in cars, and even the high-level ones now have even some extra features that I can't think of, like the self-parking feature. You know, the BMW i3, which is an electric. You can be driving. You can tell. You push a button to tell it you're looking to parallel park. You know, the park on the side of the road. And it's looking, as you're driving down the street, it's looking for a parking space for you, and it beeps and shows you that it's found a space it knows it can fit into. You push another button, you take your hand off the wheel, and the car actually turns the wheel, pulls itself into the space perfectly, adjusts the car, parks it, and shuts itself off, and you leave, and you get out.
That's pretty
And
sweet.
that car will do that now. Another feature that's coming out, which will be in the 2017 cars, or even 2016s, is the ability for the car to brake automatically when it knows that there's something you're about to hit. So instead of just warning you that there's an object there, you won't be able to hit an object. You can try to, but the car won't allow you to hit an object. So there's no need to hit an object unless you're chasing Freddy Krueger down the road, and then you can maybe override it and go get Freddy Krueger, which would be cool. But anyway, so yeah, but my whole thing was I just want people who might be checking out cars to check out the Volt, the new second generation 2016 Volt. There's no way you won't be completely blown away.
MMA cage, Freddy Krueger, Chucky, who wins?
I'm a fan of Chucky. I think Seed of Chucky has got to be one of the best movies ever made.
My wife and I, the kids had a church thing Friday night, youth group, and so we went for dinner. We don't get opportunity to do that too often alone, and so we went to a place in Tempe called Nush, N-U-S-H. Turns out the lady who owns it's Iranian, and it was very, the decoration was very interesting. It was colorful yet industrial, and all of the art that was displayed on the wall, which was for sale by artists, but it was all displayed digitally, and so it was constantly changing, and it was a very interesting menu. God, I can't even remember. There's stuff I never heard of, but anyway, we went with something we could understand. They had a special garlic fry, French fry type thing, and some chicken and beef kebabs, so we were pretty cool with that. But so you had this lotus blossom sitting cross-legged kind of atmosphere, but up on the big screen they had the MMA fights for Friday night. And my wife said, we were talking to the waiter, who's very nice, first time, having a little conversation, and we said, it's kind of an interesting theme you got going here. And he's like, well, thank you. I go, well, no, I mean, you got the lotus blossom, the sitting cross-legged, and you got these guys beating the snot out of each other up in the ring he goes, those are two of our original customers who've been very faithful, and it's making the owner and back nuts to have that up on the screen, but they specifically requested it because there's some big fight that they're interested in. And so yeah, the owner can't wait till the fight's over so we can turn it off and get back to our lotus blossom sitting cross-legged atmosphere. So anyway, the food was good. We have that entertainment, we belong to restaurants.com, which it's free to join, but like we were in Tempe, and I just pulled out the app and I just hit deals near me. I didn't have to type in anything, just deals near me, and it popped up about 5 restaurants that were within a mile radius. And so for $4, we were able to buy a $10 coupon. And it's all digital. You just do, and then when you go in and order, you just show it to the waiter, and they just scan the little barcode that shows up. And it's a great deal, guys. If you've never used it, it's either restaurant.com or restaurants.com. You'll know it because it's got the app and you download it, and I think they have restaurants in every major city. So we've been using it for years, long before it was an app. You used to have to just go online and You would find the restaurant the same way by typing in a zip code or a cuisine, and then you would print out the coupon. But no longer do you have to print the coupon. You just hand them your phone, they scan it, and you're done. So, yeah, life in the fast lane with Dwayne and Anne-Marie. So, David, what do you think about these markets?
Well, we're having a, when you look at the Globex on the weekend, you'd think some really big thing was going on, but in reality, the market is really just consolidating the gains that it made the other day. They've done really nothing wrong, and sort of just contextually looking at the market, it's just a ordinary market today. They just pulled back. There's nothing really big and important other than the movement that has happened, but it all fits in very nicely into the scheme of things here. So I'm, I don't have at my home, I purposely stay away from the market. I have it here at the office, of course, but somebody had called me and said on Sunday, hey, the markets are down, 30 points or something, and it sounds bigger than it is because it was it was done. What they're doing here is just normal behavior as far as we're concerned. So this is just congestion inside an ongoing uptrend, even though it takes quite a few points to get there, so to speak, to get to that congestion. So,
well, on my screen, I don't know if you can see my screen, but this was the gap lower open last night. And so, see, the close Friday was 86 1/4. Then we opened last night at 65 1/4. And so the bottom yellow line takes us all the way back to not last night, but the previous Sunday night's gap open, and it was on this past Thursday that we closed that gap. And we had another gap open last night, and this gap open was actually larger than this gap open, which led, to all of this. And so I'm thinking that when we gapped that much lower on the open, which took us right down to the lows of Friday, and I just extended that horizontal line out to the right, and price just, that seems to be a pretty important little area there. And so this yellow line represents when we would close the gap from this week. So I think it will be important when we see the market begin to trade in this area up above 91, which we never really got above last week, and perhaps down around 34, 35. Once we get down into that area, that's a big area. And so what's our range for the session? The session has a session low at, now this is including Globex, 61 1/4, and we got a session high at 83.75. So let's call that 20 points. That's pretty normal, right?
yeah, that is a pretty normal range, although it's a decent sized range for a market that was low volatility, but this is low volatility now, against the larger volatility that we are seeing every day here. So
we'll be watching to see when price breaks out of the yellow lines, whether it's to the upside or the downside, and then we'll start to trade accordingly. Again, this little box that I've drawn here, that represents an area that we think it will continue to be good support until it isn't. Well, how long is it going to hold? Until it doesn't. Period. That's all I can say. Okay, let me look at the chat box, Dave, see if we got any questions in here.
okay.
Guys, if you have questions for David, Garrett will be joining us bottom of the hour, so we want to get any questions in that we can. He says he doesn't have a lot to cover today. We're going to talk about the middle of the road. Carson, just think about the pioneers who settled this country. Man, they were something else, huh? Carson, I agree. I don't know I must have either David or I said something that. Did you bring up pioneers, David?
No, I didn't, but I think he may be responding to, in a way, the juxtaposition of our conversation about autonomous cars and Chevy Volts against the people who had to drive across the, the hot, steaming hot desert ground in wooden wheeled carriages drawn by horses, and how these people somehow managed. I mean, to say that we stand on the shoulders of our forefathers and so on is a cruel understatement, because none of us would be here if all of that groundwork hadn't been done, and we in turn are doing groundwork for later life to live on. I think that may be what he's saying. I'm not sure.
Yeah, and by the way, you didn't pay for that either.
What's that?
I said you didn't pay for that.
Oh, I didn't pay for that?
Isn't that what Obama said that time about?
Oh, that's right. Right, yeah, you didn't. No, you didn't build that.
You didn't build that, okay.
He was talking about your business.
All right, John had asked, if the Volt switches to gas engine and charges the batteries, does it ever switch back to battery only as a long trip continues?
The Volt does, just if I may say so, I know this is probably not interesting to everybody, but the Volt does the switching back and forth in a very interesting and unique way. The Toyota Prius, the gas engine is almost always on, and they're even changing, but they're up to now, their Prius is, the gas engine is almost always on all the time. And when you slow down, the gas engine shuts off, and as you drive very, very slowly, you're just on a very small battery for that. But most of the time, it's switching back and forth between the battery and the engine, but the engine is almost always on. In the Volt, it's actually one or the other, and so when the battery is discharged, you've driven your 60 plus miles and the battery is now discharged, the gas engine turns on, and because of what's called regenerative braking, while you're driving, you're also recharging your battery through regenerative braking, and that starts to put a charge on your battery, and the car knows that. And so it uses that anytime you come to a stop and start accelerating. You may drive a full mile on the charge that you just statically built up through ordinary driving, and then your gas engine turns back on again. And so it's switching between modes. The Volt does it the most efficiently of any of the group of them right now. So that's what it does. And what the Volt doesn't do as yet is it won't use, at least as far as I know, it doesn't use the engine as a pure generator while you're driving to fill your battery back up. But while you're driving, regenerative braking charges the battery, and you'd be surprised, you pick up a whole bunch of miles where your engine's off, you're just driving along, and then suddenly the engine will come back on, and so it switches in that way until finally you run out of gas. But if you fill up the Volt, you don't have to charge the battery. You can drive on the Volt and regenerative braking. You can get up in the morning and say, whoops, I forgot to charge, and just jump right in your Volt and drive to work. So that's why I'm saying it's the best of all of these cars, because it doesn't require you to think any differently. But after a while, everyone's going to drive electrics and love them and really appreciate the vast, incredible benefits of driving electrically, what it brings. So I hope that helps answer that question.
Okay.
I've been doing it since 2012. Since January of 2012, I've been driving electric, and I started with a Chevy Volt. I picked up a Chevy Spark EV, which is only sold in California and a few other states, and I've just had a blast in these cars. They're just unbelievably fun. Go ahead.
All right. Let's see. Here, I'm going to jump to Ed's market question here. Richard did say Freddy Krueger just died a few days ago, I believe. Okay.
Oh.
Did not know that. Okay. I'm assuming you mean the actor that played him, or I don't know, maybe that's his real name. Okay. All right. Ed W. Dwayne, over the last several days, in fact, let me just bring this chart up, because that's really, I think, the big news of the day is this incredible move we've had in crude. Ed W. Dwayne, over the last several days, we've had a big bounce off crude's recent lows. Does David believe we have a meaningful low in, or is there more downside to come?
Well,
and
I
do you
believe.
Know the news?
Oh,
Oh, and well, and I'm just asking, do you know the news that came out Friday? I was not aware of it until John B. shared it at the beginning of the show.
No, I'm not aware of the news.
Mexico hedged all of their production for the year 2016 on Friday at $49 a barrel. Now, he said that was on CNN or CNBC's Fast Money show, where
in other words,
that fast-talking guy that rolls up his short sleeves. I mean, never mind. I gotta go
okay.
picking on him. But yes, I mean, this isn't like a rumor. This is supposedly an actual fact. They have hedged their 2016 production, everything, at $49 a barrel.
Okay.
Now,
so they've locked in $49 as the
Yes.
price they're willing to keep it at. If it goes lower, they win. If it goes higher, they say, well, we took a shot, and so on. So
Exactly.
that's what they did.
So I didn't know if you were aware of that, and if that might in any way, or in fact, that's a good question in and of itself. Does that news play into how you will answer this question? The question being, again, over the last several days, we've had a big bounce off crude's recent lows. Does David believe we have a meaningful low in, or is there more downside to come?
Well, I don't know, and I would rather say I don't know than to generalize in any other way. So I do know that we're very close to a very important top in crude right now, and that we're working on a trade based on that top. This is in October crude. So we gave out the numbers this morning, and they have reached now the first number of importance, which I can now tell you, which is $48.18 to $48.20. So they did that. Today's high has been $48.25. So we're at our first important level at this point to us on that market, and they're pulling back from that. So it's a very impressive rally. I'm very happy, honestly, to see this rebound. This helps, I think. Anytime the market goes one way really, really long and really, really hard, it's, you're hurting some industry, you're hurting something. But that's the nature of markets sometimes, and this is why we have to learn to use stops if you don't already do that, so that you don't get stuck in that type of move where you just say, well, it can't go any further, but it does. And you'll notice that last week, they broke to new lows, even crushing further down to 37.75 before finally reversing. And just on intuition alone, I can tell you that a lot of people finally gave up last week on that spike down. That's just the nature of human beings and how they interact with the market. They wait and wait and wait and wait, and finally the market does one last push, and it just flushes the final people out, and then the market turns and rallies. It's, the markets are really it's a test of human psychology. It's a story about human psychology, the way these markets work and the way they move, which ties in with their technicals and so on. But human nature doesn't change over the ages. So one of the reasons markets seem to act a lot alike is because they're being traded by, generally speaking, the same human beings. Not the same individual guy, but
Right.
We all have human nature. There's no east or west or north or south in fear and greed. It's fear and greed across the globe, and that's how people many times that's how they trade the markets. So I'm happy to see this advance. I don't know if this is the bottom, but I will say this, that if we do close the month, which this is the last day of the month, so we will close it above $4.37, which is a important level to us, and I think it's obvious we will close above that. That actually is a very good close. I mean, so at the very least for Ed, it's a very good close that we're going to have in crude oil here. They're going to close above $43.72. They're going to close above that this month, and in doing so, that's a really good close. In our opinion, for crude. Even if we have a subsequent pullback, it tends to agree with Ed's question that there's probably a more important bottom that's being created here. So I think that would be one way of putting it. We just don't have all the details worked out just yet, but I'm really happy to see. We didn't call the advance. We had nothing in it. I'm just really happy to see it happen here, because that was one heck of a decline. And for new people, I want to remind them that back in 2014, in July, we were forecasting, with the market at $97, a biblical decline in crude oil, something we couldn't even measure. It was biblical, and we've gone down 60 handles since then. So this is, maybe this is enough to the market. We'll see. But this advance will also set up a whole bunch of very interesting and probably very tradable moves. I would let them have now that they've hit this first number that we talked about in our meeting, there's a range between this and a slightly higher price that we're very comfortable looking at, and we'll talk about that.
So when the news comes out that Mexico, a country, has hedged all of their oil production at $49 a barrel for the year 2016, does that mean that all oil production in Mexico is government owned? Is there no privately owned oil production?
Well, what is government owned is hedged.
Okay.
And that's what it means.
All right. So there could be some private production coming out of. Okay. That was my question.
I think the government made the decision, like a farmer would make a decision, that soybeans are at such and such a price, and they sell futures contracts against their soybeans, and they've hedged their production. So that means that if the soybean market were to decline, they gain on their short futures contracts to the same amount that the soybean market declines. If the soybean market goes up, they're hedged at their price because the futures contracts go against them, but the soybeans go in their favor. So essentially, no matter what the markets do, it's $49 a barrel for them. And that's a fair thing. I mean, they've hedged their production so that they say that 49 we're willing to take $49 a barrel for our oil, and everything else, we won't worry about.
Our resident oil expert here, Ed Corey, comments Mexico has been hedging for about 6 to 8 weeks, and he goes on to say in another post, very little private production in Mexico. So most of it is controlled by the government.
Well, they don't have enough Mexican labor. They're all living here illegally, so that they just don't have the workforce they used to have. Don't you understand?
HB1
the workforce
visas to bring some Americans down to work the rigs.
Right.
Ken wants to know: is that a daily top, or a weekly, or a monthly top you're talking about in crude?
At this point, it's an early indication for a daily top, and how they handle these levels that we've talked about, but I'm letting you know that they've reached one of them today, is important to us before we take a trade on this. Remember, we're not trying to, on our end, we're not going to try to get the very best price, although sometimes we will get a really good price on a short or a long. What we're really trying to do is get in the market when the odds are most favorable to what we think is going to happen. And there is a difference between those two conditions, obviously. And we focus on the latter, on trying to make sure that when we finally do get in, that the odds are really in our favor.
Okay, from Ed, follow up to the crude question I just asked. I have September 3rd and 4th as important dates in a number of markets, including the S&P and some of the agricultural commodities. Please ask David if those dates have any special meaning to him. September 3rd
I think I don't have a real answer for him directly, because there's a lot of tops and bottoms being put in a lot of different markets right now, and those dates will probably come into play. Certainly if he's saying, do we have some indications for later this week, with September 3rd and 4th, yeah, we do. So I think that is important to us, not absolutely necessarily as a turn or something like that, but as a price culmination, if you will, where we expect certain things certain trades to unfold in a certain way. So I would agree with that.
All right, John asked, was Friday a daily top for the ES, in your opinion?
Well, I'm trying to use the reflected wave rather than my opinion, and I'll tell you that it was not a daily top. However, the reaction that we're having comes from a roadmap top that is of some importance and is what is the reason why the market is pulling back here. But again, instead of thinking in terms of points, just look at how well the market has handled this consolidation. It's been very, very it's very genteel so far. And although we do expect some lower prices here a little bit later, the market's starting to show what we're looking for. I'm not expecting them to wipe it out, here, in the market. We're expecting this to be sort of a consolidation day, a down day, but nothing that really changes anything dramatically. Now, one last thing I'll say, if we close today below 1969, 1969, let's use that. If they close below 1969, I would think of that as being a slightly worse close, and that would potentially, open the door up for some other types of considerations, not absolutes, but considerations. Until they close, and if they don't close below 1969, I like that close, and that leaves us bullish coming into tomorrow. So in spite of the pullback and so on, this is something that we were expecting, and we have actually a full forecast out for today. We have a two-step roadmap for today's action, and that's underway right now. So
okay,
there you are.
All right. We've got Garrett coming up here in just a few minutes.
Sure.
Let's see. There was something about the euro. Let me find that. And you're welcome, Ed. Okay, from Ed T. David, Friday, I believe you expected a new setup on the euro. Any important dates or levels on the euro or the dollar?
Well, the dollar more importantly right now than the euro, only because the dollar does have a reflected wave indication that's in the process of being completed. And so if the euro does the same thing, then we would have a bottom in the euro and a top in the dollar. But I would trade the dollar off of this. And I do want to say, and I'm sorry if we've run over, and I apologize to Garrett. I don't know. I just looked at the clock and saw it's 10:43. I don't know what time.
He had sent me an email that he was going to be running about 10 minutes late, so no problem.
Okay, well, fair enough. And I was going to say that I'm getting the feeling, to be quite honest, that many of the reflected wave students that may have used it, but that people are starting to understand it much better than before, because I'm seeing people and I'm seeing indications from people that they're utilizing it in a much more effective way, which is very nice to hear and to see. And if that is the case, if I'm correct about that, and I think I am, but if I'm correct about that, that means that all of us can be using that method for, it's a forecast of turning points. It's a way of knowing when tops or bottoms are going to come in to better their trading and to really put what they learn to use. But just recently, over the last couple of weeks, I've gotten a real direct impression that it's starting to get through to some of the people that it may not have been as clear to, or perhaps because it's a visual thing, and sometimes if it doesn't plug into your existing, the way that you like to look at things, it takes time. And I think I've seen some evidence that that's actually working in the
be in part due to the fact that we've had greater volatility and possibly more follow-through on the moves?
Possibly, but yes, possibly. But I think I'm really addressing the fact that they're using it, that they're starting to, that some of the people who might have just used it and put it aside, they're starting to see, when this happens, I can pretty much, put a position on, or however they want to do it, whether they're following our advice or not. I'm just saying, just publicly, that it pleases me to see that, and I'm happy that I am seeing it, because just like in anybody's case, if you teach something to somebody, you'd like them to get the full value out of it. I didn't teach it as a method that I just had figured out a day or two ago, or something like that. It's something that I'd been using for 18 years,
right.
and it meant a lot to me to put it out there. And the same way it is with the square principle and so on, it means a lot to me. So I'm just happy to see that the turning points, people are starting to get on to the turning points more, and how useful and valuable and real they are on a multi-day or multi-hour basis and so on. So I was very pleased over the last couple of weeks to see that, and it really struck me late last week when I'm seeing people put it to use. Hey, I bought that bottom, or I sold that top, and so on. So with regard to the dollar, we do have a top in on the dollar, or is being put in, and we're looking at that. We actually, I'll tell you this, and then I'll go. The dollar, soybeans, the Canadian, the euro, gold, and crude all are in very interesting and provocative, tradable, potentially, positions. We may not get all of them. We may forecast all of them. We may get some of those trades. However it plays out, there's a lot going on this week in the markets. There's no doubt. I'm sure others probably feel the same way, but I'm just saying that there's quite a bit that's setting up here for some very interesting trades, and crude is not the least of them. So there you are.
Okay, I'm still waiting on Garrett, so if you got some charts you want to show, go ahead.
Well, I only have one, and I'll probably save that for tomorrow, but let me just generalize what we were looking for today in the S&P, or be a little bit specific, because a decent amount of it has happened. We had given out this morning that the market on a multi-hour basis would generally want to move up today and test 84 to 85, and then go down today and at least make a second attempt at 64 to 63. Now, they may or may not be able to get to that, and that's going to be interesting to see how they handle that. But the market did this morning run up to 83.75. This is, the market really could have easily touched 84 to 85, but for whatever reason, they didn't quite get there. And now they're selling off from that as we literally drew it out with a blue line this morning, what we thought was likely to happen in advance of it. And we've gone up to the 84, 85, we've turned down, and the market should, if this is helpful to people, even though it's really, quote unquote low volatility, they should have some pressure on them here into what we said was slightly beyond, or a little bit beyond midday. And we're at that point now. So we should see potentially a little bit more on the downside here, and this will help us judge the condition of the market and whether or not we'll see higher prices from here and so on. So I hope that's useful. In other words, there is a force pushing the market down that we've identified. There would be two forces today. They were relatively simple. One was up to 84, and the other one was down to 64 to 63, and we'll see if they can get that done in this, quasi low volatility environment where our range is really big, but you can see that it trades like a very low volatility market, even though the range is bigger than normal. So there you are.
Okay, guys. Garrett just showed up, David, so if you want to say hi, Garrett, I'm going to unmute your mic in 3, 2, 1, and you're live. Welcome to the show.
Thanks, Dwayne. Appreciate it.
How are you?
Sorry, I'm fine. I'm a little tardy today.
That's all right.
Been a busy market. Is my sound coming through okay?
You sound a little bit
You could be
different.
a little louder.
Yeah.
Let's see. How about now?
Beautiful.
There you go.
Perfect.
Okay. Always have to ask on these mics are really powerful, and so I didn't want to drown anybody out. So I have it turned away, but I guess I need turning it direct will work better, I guess.
No, you sound good. Now, we've had a historic week, and this week, by comparison, is starting off a little bit quieter. What are your thoughts overall? I know last Monday when we spoke to you, we kept your segment kind of short because it was the beginning of this big, let me just show it here, this historic sell-off, and so a lot of clients, a lot of business to take care of. Bring us up to speed. What do you think's what's happened, and why did it happen, and where do we go from here? That's a big question.
I think it happened more than anything else because it was overdue to happen. So, I kind of look at the market. I'm not a believer of news events causing the market to do what the market does, unless you have, just an absolutely major event that has an effect. But you know what the news people do? They'll compile the 5 negative things during the day and the 5 positive things. And if it goes up, they'll read the positive, and if it goes down, they'll read the negative. My point is, if it goes down and they read the negative, the 5 positive things still happened, right? So,
Yeah, that's true.
And the other way around, of course. So, I just don't view it that way. I don't think it's a news-driven thing. I think the market, like I say, I view it as a living organism, and I think that's why we do technical analysis, because it gives us a pretty good read on that type of thing. I was expecting a decline. We were positioned for one, and we covered into the froth on Monday morning. So, knock on wood, so far so good. That was fun. Now some of the people, Elliott Wave people and so forth, take a look at. I'm looking at the S&P, and I should have put this chart. I guess I can show you on my page here, but I should have put this chart. You know what I'll do while we're talking?
Want me to send you the chart?
You know what I'll do? Give me just a second, and I'll take this chart and copy it, put it on the page where I have other stuff, and then I won't have to say I could have done this. Let's see. I got a little bit of your stuff there, but I think this will do what we want it to do. Give me 1 second, and I'll see if I can transfer that over, and then we can go to... and we can look at it and see if it makes any sense. Let me see if I can. You know what I'm going to do? Rather than mess this up, I'll put it at the bottom of the page, and we can work backwards. At least I'll be safe doing that.
Okay.
Okay. There we go. If you want,
send them over.
Whatever you do on your end to
okay.
Look at my page. Or
here we go. Alright, all you got to do is accept and tell it which monitor you want to display.
Okay, there we go.
I can see it.
Okay, this is partially well labeled. That's the S&P. And we're looking at, in this case, what you see here, this is my Elliott wave count, which by no means it's correct. And I'm not quite so sure. If you get 10 Elliott people in a room, you've probably got 10 different counts. So I'm just one of the 10.
I've heard that before.
For good reason. Anyway, this was the high here back in May. So you've got a wave 1 down, an ABC, a wave 2, A, B, C, D, E, boom, down to a wave 3, a wave 4. I think that's the way Bob Prechter counts it as well, and probably a lot of other people. I'm not so sure this is the count, because down here on the 26th, you had a lot of markets turn, and I'll show you a few. And if you look at this, it's difficult to count it any other way. But if you break this down to daily and even 65 minutes on a cash chart, then you get a wave 3, arguably a wave 4, and a wave 5 down, which could complete that pattern. So
did you say 65 minute?
Yeah, just because it fits into the day evenly. A 60-minute chart will do the same thing, but sometimes I like, on a futures chart, if you use an 81-minute chart, it breaks down the day evenly. If you use a 65-minute on a cash chart, it does the same thing. So that's why I say 65. But you can use a 60-minute, same, pretty much the same picture. But on a cash chart, that's why I use 65 minutes.
Okay.
Because you get an equivalent number of periods. Anyway, that's so that's one count. The other one would have this as a 3, 4, 5, or an ABC, or whatever you want. But I think that the odds are you're going to either go down from here and test those lows or make lower lows. The major support, I put the major support in down here. If you were going to break it, that's probably where you'd go. And this is serious major support down here. If you break that, you've probably got your top in for sure. At this point and above, you've got a chance to go up and make a higher high. The other period that comes in for me, I mean, I obviously had this recent period when the market broke down as a high possible turn date just on my own stuff, enough to be short. And I've got another one coming up, seasonally after Labor Day, or going into Labor Day. That's many times, if you go back 100 years, a lot of times your high for the year is around that time, around Labor Day, and probably more so that time than almost any other. But things change. August used to be the strongest month for the market. It's been the weakest month in recent years. So, things change, and certainly that's been the case recently. But I think the odds favor that we go up from here into early mid-September, and in that time period you've got all sorts of stuff. I mean, for people who look at those things, you've got the Shemitah on Sunday the 13th of September. That's the Jewish holiday having to do with Jubilee, and it's really corresponded with some it's people, I guess.
Now, is that the 7-year cycle or the 50-year cycle?
It's a 7-year cycle, and right. 7 of those for 49, and then the 50th year is Jubilee, which I believe is coming up this next year. So this is a very significant one. Plus, you have the final blood moon, which comes in at the end of the month. So I mean, you've got some things that in the past have been very significant. I mean, blood moons.
When you say end of the month, you mean end of September?
End of September.
Okay.
To 28. Yeah. Okay. Thank you. So you've got an awful lot of stuff in September coming. I mean, apart from that, I've got stuff in my own work that comes in there, which is what I'm going to focus on. I need to have an awareness of these other things simply because they've had such incredible impact. If you go back 7 years from this date, and I believe it's ELUL 29 or whatever, on the Hebrew calendar. I'm not the authority that you want to research on this, but do what I did. Google it. And I've read a great deal of this, where other people would probably call themselves authorities. I'm not going to take that bold step. I'll just say I've read a little bit to know a little bit about it. But the thing that's so interesting is that if you go back 7 years, that was 2008, and the day the market took a real serious hit in October. I think it was down 777 points.
Was that the day it hit 666?
No, because that was in 2009.
Okay, all right.
So no, it wouldn't be. But it was your first collapse, and you were down 777 points. If you go back 7 years before that, interestingly enough, it fell on the day that the stock market reopened after the 9/11 incident, and you were down 7% on that day. So there's two pretty good days. Now, if you go back before that, there was an incident that happened in 1994, which was the one right before that. If you go back before that, you had the crash of '87. So, and I don't know what happens if you go back before that. 1980, obviously you could have had something there. 1973, I did look at that, and because I tend to go back as far as I can on that. It's pretty significant. Now, what's the difference this time? maybe nothing. But to me, it's become fairly advertised. There's a lot of books, some on the bestseller list that have done this. So people like you and me who dig around for stuff like this, certainly are going to be aware of it. But now a lot of other people are going to be aware of it. And I've noticed that they don't generally advertise market tops. So I just start to look over my shoulder a little bit. I'm aware of this. If this market gets overbought again and moves into a period where, it's starting to run out of momentum, then, I think it's something to really pay attention to. But anyway, that means that this probably would need to rally up from this point that I've got is wave 4. This would probably be wave 5 or like I say, a C wave, and then you're going up to and maybe this is a wave 4 down here, and you're going up to make a 5th wave.
So I'm not an Elliott person, but what's supposed to happen in wave 5? Is that?
Well, wave 5 is a terminal wave.
Okay.
So wave, whatever direction you're going, when you hit that wave 5, you've kind of gone about as far as you're going to go, and you're going to reverse from there if the wave count is correct. So that's all that means.
Kenneth,
and same thing with the C.
Oh, I'm sorry. I just want to say, Kenneth commented, it's all detailed in a book called The Mystery of Shemitah by Jonathan Kahn, and it includes charts. Now, I assume that's a book. Kenneth, is that correct? Or is it a website? Or
that's I think Cohn's book is one of the main books, maybe the original.
Okay.
And as life translates, there have been many others now as well. And there's a lot of stuff on. You've got to pick and choose your sources. There's a lot of stuff on YouTube, and a lot of stuff that you can Google. And I think what you have to do is just kind of, the problem with having a lot of stuff is you've probably got some excellent sources of information, and you've probably got some sources where people didn't have anything better to do or wanted their 15 minutes of fame, and you got to be able to sift that out. So, try to go with your intuition. And
now,
pick
Burwell asked a question. When you are measuring your cycle time periods, do you measure bottom to bottom or peak to peak?
That's a good question. I hate politically correct, by the way, but as the term is used, I'm probably politically correct on that. I do both. I'll measure anything to anything. If I think it's valid and I've found validity, what I like is validity. So if I've got, for example, if you take the bottom in 2002 and the bottom in 2009, you've got two historical bottoms. These are really meaningful. So if the bottom to top count that George Lindsay wrote about has any significance at all, there's a couple of time periods where it ought to work. Well, if you take the bottom to bottom and I think I might have done it on the show before, and measure that out from 2009, it puts you in August of this year. And if you happen to break it down to days, I think it came out to July 30th. So I was aware of that at the time, and that was just one of a number of things that made it look and I wrote my newsletter observations on July 22nd and gave, about as strong a warning as I can give that this really looked like a top. And, but to answer his question, I think the George Lindsay did the bottom to top count, so clearly that's something. But I look at all sorts of things. I'll go back and look at time cycles. Sometimes they're just plain cycles, and you have tops and bottoms, and maybe there isn't any rhyme or reason, that this one's a bottom, this one's a top. But if it's a good time cycle, then I just look for that time cycle to come up and that's maybe an area where I have an expectation for a turn, and I don't get too tied in. I'll give you an example. I'll give you a good example. In fact, I wrote my newsletter on, I got to do this by memory, July 17th of 2007, and I did something very stupid. I said the market's going to top on July 19th. Now, why is that stupid? Because, if you're wrong in print, and everybody knows about it. I was very convinced that was going to happen because all of my technical work came together on the 19th, not only in time, but in price as well. And for me, that means the intersection of a bunch of lines, and if you looked at the chart, it would probably give you vertigo and drive you insane, but it's meaningful to me. Anyway, I had a whole bunch of things coming together at that point in time, and I thought, you know what, if you do your work and you have confidence in what you do, and other people have confidence, and this looked to be a top and I couldn't see anything else, then call it, stick your neck out, be a man about it. So I did. Thank God the market topped 2 days later on that date. Now, here's my point of bringing that up, other than the fact that I happened to get lucky and it was right. But I was lucky because everything I do came together at that point. At that point in time, here I am in July of 2007, when my next date on my long-term work was in early October. So I thought, hey, this is easy. I got a July top. It's going to be an October bottom. So mentally, that's what I was prepared for. Well, as we moved forward, guess what happened? We got a big correction in August, and then we turned around and started to rally in September. And lo and behold, as we came into October, it was pretty clear that wasn't going to be a bottom, but it looked like it would probably be a top. As I got to refining my work, I wrote another newsletter on October 5th and said that I expected the top to come next week. Now, I had 2 dates the following week. On the night, I don't remember what I had for lunch yesterday, but I can remember these things because they're meaningful, okay? But, I had 2 periods that came in on my work the next week, which made it difficult for me to call the exact time. So I called the week, and they were the 9th and on the 13th, which was a Monday and a Friday, as I recall. Somebody got a calendar, you can check me out. But October 9th and October 13th. Well, guess when the market topped?
When?
On the 11th. It made its high on the 11th. Right in between those 2 dates.
Okay.
But anyway, I called for the next week because I didn't know when it was going to be. But the point is, initially in July I was looking for a bottom because that seemed logical. But as time got me closer to that point, it became very clear that it was going to be a double top, which it was. So my point being, when you look at these things, my thought is, maybe somebody's got the ability to do it. I don't. I've got to kind of wait till we get close to the time before I decide to stick my neck out and do something. So my thought would be, don't get too tied in with whether it's going to be a bottom or a top if you've got a good cycle and it's working for you. Let the time play out till you get close, and then see if it's extremely overbought or extremely oversold, and that's probably going to help your cause. But anyway, that was the point there. That makes sense?
Yeah, it does. Let me check the chat
So
box.
I hope
for
that answered his
questions.
question.
Okay, now that set in motion a big question from Burwell. Question for Garrett. Viewing some of the charts that you've previously displayed on CFRN, you use parallel channels in your analysis. When you are approaching a significant top or bottom on a higher time frame, based on your many years of experience, which lower time frame do you place the most importance on when its parallel channel is breached? For example, if you are approaching a weekly top or bottom, is a breach of the parallel line on the daily the most important time frame, or will you look for a specific intraday breach?
That's again a really good question. I'm going to look for an intraday thing if I'm looking at a short-term chart. If I'm looking at a 65-minute chart, or a daily chart. Now, remember, one of the best technical indicators is something called Turtle Soup by Linda Bradford Grafke. There was a group back in the I forget. I want to say the 90s, somewhere around there, called the Turtles. Do you remember that?
Oh yeah.
Richard Dennis.
In fact,
had
Leslie of Burton Leslie, she was a broker for two of the original Turtles.
Oh, really? Okay. Well, there you go. Well, they'll know a lot more about it than I do. But I know of a number of the people that were in that group. I believe Richard Dennis was the guy who trained them. And their deal was breakouts. So if the market would break out, let's say when we're talking about channel lines here, if it broke out above it, then they'd buy it. And if they broke out below it, then of course they'd short it. And they made a ton of money and all retired and did that. Now, what happened? As time went on, people start anything that works, people start to look for these things and then attempt to take advantage of it. So that's what happened, and hence Turtle Soup is when you get a breakout but it fails. Hence, if you're a turtle and you're playing the breakout, that's Turtle Soup. You're getting cooked on that one because it's a breakout and it fails, or if it breaks out to the downside and you short it, if it turns around and reverses. Well, lately I've noticed that, lately being the last many years, I've noticed that happening a lot of times, and probably exactly why Linda came up with that terminology. Obviously, she noticed it happen quite a lot too. So the answer is, if it's a monthly chart and I've got a big channel like that, hey, that's probably a top. And if everything else that I've got is saying that it's a top, then you just do, I don't worry about the line that much. At this point, if it's a monthly, now I'm breaking it down to weekly, I'm breaking it down to daily and probably even hourly to look and fine tune it for a place for entry. I just know that I've got a huge amount of resistance there, and I know where to, I'm going to put my stop in there, and I've probably got a great trade there. If it's running into resistance, let's say on a monthly, weekly, and daily basis. If it's just a daily chart, look at this chart, the chart that we're looking at here. I think this is a weekly, but whatever it is, I should have labeled it. Anyhow, you're coming down here, but that's a pretty good line. I think you just apply your own personal discipline to that. I don't have any fixed things about the channels. I've learned to draw channels and trend lines. Channels, you don't draw channels. You draw trend lines and then you make parallels off those trend lines. That's what a channel is. So I've learned how to draw those pretty well over time. The advice I'd give to somebody is, don't worry about lows and highs so much and being strict on that. 99% of the people will tell you that's what you do, and a lot of times it is what you do. But what's more valid than that, and I like validity, is if you can get the most lines to touch a trend line, that's your valid price line. Learn to do that. Sometimes, for example, if you have a spike on your chart, that's happening because the emotional peak is the greatest at that time. That's when people were feeling the most greedy or the most frightened, and it's reflected in the price. But is that the most valid price? Frequently you'll have a price there and it'll close way away from that. So generally the day before is a more valid price entry. So I've used those frequently. So anyway, let me share that with you. That's probably enough information to confuse darn near everybody, but it's a truthful answer. Hey, I've got some other charts on here
Okay.
if you want to look at them.
Sure.
Let's see. For those people who are interested in China, I thought this was kind of interesting. Everybody's saying, oh, you know, China's done and so forth, and then I know some pretty smart people who say it's just relaxing. And, you know, for me, on the long-term cycle, they are the new trade leader. They are the country that is coming in, as we did in the 1920s, to usurp that role of trade leader. We took it away from Great Britain, and we became the trade leader because in the 1920s we were able to efficiently and effectively mass produce where nobody else could, so we could produce goods at a competitive price and win over that, and we did, and that's what happened. We had a pretty good run in the roaring 20s, and then we had a depression that knocked 90% out of the market. Japan was in a similar position going into 1989. We know that they've been in a recession, depression pretty much ever since. China is moving into that position right now. So, you know, is that going to play out that way? Well, it should. But let's see what happens here. Here's the high right here in the chart. You get an A wave decline, which is a 618 retracement from the low back here in May, which you can't see on the chart, but the low to high, this is a 618 retracement right on the money. Then you have an ABC rebound for a B wave. I mean, I'm assuming this is what it is. And then you've come down to a C wave low down here. And this is that turn date again. August 26th, I believe, is the low there. It really turned out to be a big turn date. So it's come down and made this low, and this is a 47% decline in 52 trading days, which is kind of a big deal. That would probably imply that that might be the market top in the lead market, which is the Chinese market. Let's see, how do I move this so I put my, oh, here we go, I can do this. The next chart is, if that's what's happened to China, what happened to the S&P? And the S&P, let's shrink that up a little bit. No, that's not what I wanted to do, but maybe that's a good idea. Let me move that up just a little bit. Okay, here is the same situation. Here's the top, and from this top in May, we only had a 12.5% decline down to the low that was made in the S&P. By the way, the Dow Jones had a 16.25% decline, but this was 65 days down to here from this top. This one was 52 trading days, but from this more recent top, which was almost at the same level, this was only 25 trading days. So we had a pretty sharp correction. Anyway, I just thought I'd point that out. We had again, this is from the October low. This is where a 76.4% retracement would be. This is an 88.2%. So I guess we had a, who knows, about an 80%, 83, 4, 5% correction. Pretty good correction off that October low. And I believe we made a lower low in the Dow. Because August was such a great trading date as far as a reversal, I thought here's a big picture gold chart, and it's pretty remarkable. The gold bugs have just got to be going nuts, because over here, when gold was up at $1,900 and moving up from $250 back in 2001, you know, the gold bugs were saying, oh, you know, here we go, we're on our way to 5,000, 10,000 an ounce, you remember. And lo and behold, that of course didn't happen, and you had this very interesting pattern off this initial top. You've got this A, B, C, D, E, then you break out and fail. then you have this big drop. So here you have a big drop. Again, you have this A, B, C, D, E, breakout and fail. And are we going to do it again? This, if you can see this little yellow bar in here,
I do, yes.
it's not easy to see, but it's there. It's a 618 retracement of the 2008 low and the 50% retracement from the move from 2001. And I'd drawn in a little target box, being this yellow box when price was. I had that in there for a long time. We were back here. Price was well above it, and we worked its way down to this price level, hit this price target over here, obviously, and then hit it again. And then I had this, after we had bounced off here, I had it as another target, because after we hit it twice, a lot of people thought, oh boy, look at, we made a double bottom, we're going to go up, we're pulling back at a higher high, a higher low than this low, and then we're going to take off on a wave 3 to the upside. And I thought, you know what? I don't think so. Didn't look that way to me. And I drew this in there, expecting price to come down to there, and it came down there. Then it broke through it, and then it hung around it and broke up and came back down to it again. And I've got a lower target down here. So on gold now, it's come. I still think it's got lower to go. And I think we might be able to get down to this yellow area, which is about 1,000, and I think 1,000 could be broken. But I'm very cautious on it because we're coming into a time period now that gets pretty good for gold. In fact, gold turned pretty much when it should turn, right down here in August. The long-term old gold bugs, and I was in gold back in 1970, so I got some history. I got some history there, and I've been lucky with it. Getting in low, I got out near the highs in 74, and we got out on the day of the high in 1980, and so I've got good history there. I'm not a gold bug. I'll sell a top on it and short it if it looks like it. But this is a time that's getting my attention because this blue line is a long-term trend line. And it's coming in, and I think it should be support. And although we didn't come down to it, it's been support, and it's going to be very interesting if we continue on down here, which I think we might in the next week or so, just to see whether we break this line or whether we come down to it or what happens. But August is, the old, talk about old market adages for what they're worth. You buy gold in August and you sell it in tax time. Now, that's a generalization, and it'll probably make you go broke if you take it literally. But it's one of those things that's good to remember every now and then, because they don't say those things unless they happen every now and then. Like I say, you don't necessarily take them to the bank. You just put them in the mix and as something to be aware of. Here is a better picture of, looking at it on a monthly chart. This is that line from 2005 to 2008. This is why this line is important to me. We've already come down once. We've rallied back up. We've come down hard again. And we've come in here. You could make an argument that that's 5 waves down. You can make another argument that this is a head and that's a shoulder, and we're building another shoulder, and gold's going to go back to $35, or you can do a lot of things with this chart. But to me, that's a pretty good support line there, and I'd give it some respect. And here's a real good support line down beneath it. So if it somehow breaks here, it's probably coming down here. Like I say, this is a great place to be bullish on gold. Obviously a good place to be bearish on gold, and we're getting down to a place here where maybe it's a good idea to be a little ambivalent and let your technical indicators tell you what to do. But I think gold's going to maybe go a little bit lower here, but I'm starting to get a little more interested in it than I am disinterested at the moment. So anyway, for what it's worth. Let's see what else I put on here. Oh yeah, okay. This is the dollar, and of course the dollar's related to gold, and for us Americans, it's pretty much related to everything else. And to nobody's surprise, you've got a high in 2001 when gold was about 250, and you got a low in 2011 when gold got up to 1900 and change, and now we've had a rally off that, and it's going to be real interesting to see what happens. There's a lot of stuff out there about currency wars, and all the currencies are going to go to zero, and the dollar is going to lead the way, and anybody who knows their history about depressions understands that if we go into a depression, and certainly we're in a depression cycle, in other words, that's what's due. Whether it's going to happen or not, I don't know, but it's tough to bet against Mother Nature, and depressions are there just like winter's there in the growing cycle.
Mm-hmm.
Winter's not bad. I mean, if you live at the beach and you want to go to the beach, it's not great, but if you enjoy skiing, it's not such a bad deal, and you know what? It's going to happen. So if you live in a place where it gets cold, you can plan for it, buy a coat, get ready to go skiing. In economics, depressions happen. They happen for a reason. They clear things out. They return people to normalcy. There's a lot of positive things that come out of a depression. They get rid of debt buildup. They bring prices back down. They bring families together. They bring about a respect for value. They bring about hard work, working for a change, for what you earn for. They take away entitlement. They do a lot of things, and we're due for one. So my thought would be, don't get all hung up on whether it's politically correct or not. Be aware. Be aware of what's supposed to happen, and maybe plan for it a little bit. So anyway, my point with respect to the dollar is, if you go into a depression, the dollar was a pretty good thing to hold last time around. That doesn't mean it's going to be a good thing to hold this time, but the thought is, it's going to require some homework this time, because things are different, and as usual, at very critical points in time, you've got 50% of the people telling you one thing and 50% of the people telling you the other. So this is one of those times where it makes a lot of sense to do your own homework and have a discipline. Discipline will do you a lot of good in those type of scenarios. So anyway, that's my 2 cents worth.
Let me throw a couple more questions at you here real quick. This from Richard. And Burwell said, thank you very much for your answer on his questions there. Richard, does Garrett use geometric cycles? Example, market says bottom on July 27th and then bottoms 30 degrees later on August 27th. Use 1 or 2 days either side as orb of influence. This can run as example low minus low minus low, and then change to a high as I guess maybe he was trying to say this can run as example low 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 and then change to a high as example. This can be in 60 degrees 2 months, 90 degrees 3 months, 180 degrees 6 months, and so on. Does he use, or is he aware of this technique?
Let me put it this way. I'm somewhat aware of it. Okay. I don't use that, but that doesn't mean that it's not valid. What you do, I think, is you pick and choose what works for you. I'm aware of some of that stuff, and for me, what'll happen is I'll try to utilize what's worked well for me. Obviously, nobody's aware of everything, so I certainly could probably be missing something that would augment what I'm doing, and I'm real open to utilizing just about anything that works as long as it does work. What I would say on that is that if you like it and you found it useful and you found it valid, then by all means, utilize it. And the thing that I said earlier with respect to whether you have a high or a low, don't get too sold on what it's going to be in the future. Let the market tell you as you get close to it. And then if it's coming down to that point and you're looking for a bottom and it's coming into your time zone, and for me, if I've got some trend lines and some channel lines there and a few other things that I look at, and they're all kind of there to support it in that area, well then all of a sudden, I mean, this is a game of probabilities. What that does is it just elevates the probability and helps me refine what I'm looking for in that type of a situation. That would be my suggestion, and from the sound of it, that kind of sounds like that's what he's doing.
Hey, Richard, does that answer your question? Does that help? And Michelle has asked if you could please comment on crude. I mean, we sent out our Concierge Trade Alerts last night, and we provide each night both a long trade and a short trade, because rather than approach the market with bias or an opinion as to what's going to happen, we force ourselves to take off our opinion hat and put on our short seller hat and find the best short entry that we can find, and we put on our long hat and put on the best long entry that we can find based upon what the market does, so that we're not predicting what the market is going to do. We're simply telling our subscribers, this is how we will handle the market if it moves to the upside. This is how we will handle the market if it moves to the downside. And so the alert that we sent out on crude oil last night said to be long above 46.10. So in other words, one tick above 46.10 puts you into a long position, and short below 44.60, one tick below 44.60 puts you into a short position. We did a $1,000 per contract move on the downside, and we've done a $2,000 per contract move on the upside today. Now, there was some news that came out Friday that was brought to us today at the beginning of the show by a member of the audience, John B. I wasn't aware of this, but he said that back on Friday it was announced on Fast Money that Mexico has hedged their entire production for 2016 at $49 a barrel. Ed Corey, our resident oil expert, has weighed in and said that Mexico has been in this hedging process now for about 4 to 6 weeks. So just an incredibly explosive movements today in crude. $1,000 per contract to the downside, $2,000 plus to the upside. Do you have a crude chart that you can show us, or would you rather that I take back the charts and show my crude chart, and maybe you can comment on it for us?
Yes. My comment again is, use your own discipline. Whatever you have that works is probably the best thing to do. I have a methodology that worked very nicely on the crude oil, and it came in again at that bottom time when everything else reversed. Oil did too, and it got and it made a low there. Our methodology, one of the methodologies that I use, is a little bit different. I wait for something to get extremely overbought or extremely oversold based on something that I do with a partner on that. We've worked on for a long time, and the interesting thing about it is what we're looking for is not something to be overbought or oversold, because they can remain overbought or oversold for a long time. What we're looking for is something to be so overbought or so oversold that it's going to turn now, and we're pretty much tied to the now. In other words, in a very short period of time.
And so, are you trying to enter it before the now or after?
We actually anticipate turns and buy or short before they happen.
Isn't it safer though to wait for the turn to actually happen?
Yes. If you don't have the type of technology and what we've worked on over such a long period of time, it is. But if you do, then it's not, and I'll tell you why. If you view, one of the things that we use is, those exercise bands that that are so. Anyway, if you take one of those and stick them in the door and close your door, and then you lean back as far as you can, that's a picture that we've got. It's really, when you really get stretched out to just about the point where that band's going to break, the odds are extremely in your favor that you're going to go back in the direction that you came from, right? Now, what happens if you're wrong? How wrong are you going to be? You see what I mean? In other words, my risk of what we've defined with that is about an 85% probability, and with that of being correct. So you got a 15% probability of being wrong. You know what happens when we're wrong? We generally add to the position, because now that 15% has dropped down to even lower because you're even further stretched out. So that's worked very nicely. Now, what do we do on that? Do we look to let our profits run, cut our losses and let our profits run? No. We look to harvest profits, because this crazy market, on the S&P, you've had 32 whipsaws this year before this drop. That's 4 whipsaws all year. Last year, 86% of professional money managers underperformed the benchmark. They usually underperform the benchmark over time anyhow, but 86% is a pretty big number. I'll bet you this year it's 95%. I don't know that. Last year there was an article in CNN Money that quoted the 86%, so I'll use their number. But this year I'll bet it's a much greater number. So what I'm doing on that is trying to find a turn, catch a profit, and put it in your pocket. And that's a great situation, because in 1981, November 1981, if you didn't like the market, you could have pulled out of the market, gone into money market funds and made 18%, or gone into T-bills and made 15%. Now you can do that and make 0. So if you're able to pick off a percent here, a percent there, and do that very safely with very high probability, all of a sudden you got a pretty good return in a market that pays 0. So it makes pretty good sense. Now, on her question, I can just tell you, it finally you've got a bottom that bottomed there was a reversal date with everything else, and oil participated with that at what, $38 a barrel, somewhere around there. Anyway, right. we were looking at that and actually looking at it even a little bit earlier.
Well, oil's up 27% over the last 3 days. Yeah, and there you go. And that's exactly what having that thing stretched out is going to do, and that's what it did. But at this point, it's now in the middle. For me, it's now in the middle of the road. Where, what's your opinion? I said, I don't have one. It's not stretched out maybe enough yet on the upside, and it's obviously you say it bounced 27%, so it's let off a little of that tension that was there on the downside. So my opinion on that, at this point, I don't have an opinion there, because it's not the type of thing I'm looking for now. It was the thing I was looking for on the 26th, though. And if it gets stretched out on the upside, it's probably going to give a pretty good opportunity. Again, when you get a low like that, odds are you're probably going to come down and test it again at some point, unless there's just a major fundamental change, and I don't think there has been. But it sounds like she's got a good methodology that's working. So, I don't think I have any input that would be any more helpful than that. I don't have anything. Clearly it's made a low and it's bounced off that low, and I'm not, like I say, I'm not overwhelmingly excited in either direction on oil at the moment. It hit its point for me, and we got in, we got out. So I'm now in the no opinion area. So I'm not going to be very helpful. Okay.
At least at the moment.
All right, guys. Anybody have any final questions for Garrett? I'm gonna Richard K. Let's see. Richard H. Who asked for that? Ed. I'm gonna post that. I'm gonna send that to you. Okay. And I guess there was another one too. Let me send that to you real quick before I forget. Okay, I think I sent it to... Yeah, okay. Alright, so there you go, Ed. Okay. Alright. Garrett, did you get... I set you up... I'm trying to get all the different co-hosts from each day. Did I get you set up with an email address? There was one person that told me they wanted me to filter the messages through to them, and that was, I think, Ed.
That was me.
Oh, that was you?
That was me.
You wanted me? Okay, so you
Yeah,
and Ed both want me to filter the messages
Yeah, no, I
through.
don't want to, I won't be able to,
Okay.
I mean, if there are, three questions.
No. I can forward them to you. No. I just want to make sure, because I do have... Let me get these charts back over here.
Yeah, I'm not going to be able to give too much of that on other than
No, I understand.
Maybe on the show. But
No. That's fine. I understand. I did get the page set up, guys, so that all of you, if you go to CFRN Team, you'll be able to see on the different days. Garrett, Monday, 1:30 Eastern. Jonathan's Tuesday. Jim is on Wednesday. Burwell and Ed alternate Thursdays. This Thursday will be Ed Corey, because Burwell was with us last Thursday. And Mark Douglas, if all's well, he'll be back with us again this Friday. And here's some information down here on Garrett that talks about his history in the markets and just some of the groundbreaking work that he has done. So, that page is starting to come together, and to get there, you just go to CFRN Team, okay? And if you missed any of today's radio broadcast, you can find it in two places. You go to Emini Radio Blog, you click Watch Recent Broadcast, and later today, it will appear right here. It will say today's live broadcast for Monday. You just click it, give it a moment to load, and the entire show is recorded for you, audio and video. Additionally, you can go to youtube.com/CFRN, and there you have Friday's show, Thursday, Wednesday, Tuesday, all the way back to last Monday. It just keeps going back. So 2 spots. Now, of course, you can also go to iTunes, okay? And in iTunes, you will find... I don't get every show uploaded to iTunes every day because it's a little bit of a complicated process. I'm attempting... I have a protege working with me in Bangladesh, a young man with a degree in finance who is looking to find some work. Having a finance degree in Bangladesh apparently doesn't do you a whole lot of good, because they're just there's not a lot of work. And so he's looking for work, and we're starting to work together pretty good. Let's see, Richard say, don't forget to tell night traders there's lots of China news coming out tonight. Okay. Now, Garrett, you're pretty much a technical guy. You don't really look at the news. Is that correct?
I'm not tied to it. I try to, I try to look at as many things that I can that might have value. But
well, here's what's coming out of China tonight. At 2100 hours, we've got manufacturing PMI. That is a high impact event, 3 heads. Non-manufacturing, which is a medium impact. And then we have what's called the Caxton Manufacturing PMI out of China at 2145. Okay, high volatility expected. Now, depending upon where this number comes in, this number and this number, this could really rock the markets. And so, the Asian session tends to be typically pretty quiet, but we could see a huge change or a huge difference there tonight. So be aware. The times again on those 2100 hours and 2145. Well,
I got a question for you.
Yes, sir. Shoot.
Before we go, do you suppose that China? It would appear to me that the United States government reporting groups like have a tendency to probably hire the creative writers at the liberal arts schools. Would you think that might?
Yeah.
I'm making a little joke that's probably not that funny. I mean, I think
there's a whole lot of truth in it. I mean, we talk about how smooth it was last week that, with the market crashing around our ears, surprisingly, the last GDP gets upwardly revised.
Mm-hmm. Yeah, it's convenient, isn't it?
Yeah,
I wonder, my guess is that China is certainly probably watched what we do there and is probably no less creative than we are. I had can I share a very quick story with you?
Sure, you bet.
Back in the day, before all this ability of information to move really quickly, I was speaking at a conference. I think it was New Orleans. I think it was the National Committee for Monetary Reform that they used to have every year, and really, and I can't, probably back in the 80s sometime. But they had they'd have these huge things, 5,000 people, and then when you'd have a break after one of the speakers would do, and you'd have a break, everybody would rush out, to the ticker tape to see what durable goods did or something. You remember those days? Am I enough of a dinosaur where that nobody remembers that? Anyway, that's what happened. And one day I was speaking there, and I asked the question. I said, I'd like to ask the audience a question. I said, how many people here are work with major corporations? So a lot of people raise their hand. I said, how many people are in management positions with those corporations? A lot of people raise their hand. I said, how many people are in top level, main upper management officer during that type of time period? Perry, I'll call you right back. There we go. Excuse me. How many people were there? So we had quite a few people. And then I said, I just have one question for you. I said, how everybody goes out and checks the news to see how durable goods and stuff are doing? I said, here's my question. I said, how many of you, show me hands, how many of you have reported your numbers to the government this month? Not a hand went up. I said, wait a minute. I said, I'm not intelligent enough to understand this. I said, you people here are made, I'm talking high-level management. Mm-hmm. I said, right. Don't you know which person reports these numbers that the government uses? You're with major corporations. I said, I expected all sorts of hands to be up. I said, okay. I said, I'm sure you don't do it, but how many of the people know the person who reports those numbers from your major corporations? Not a hand. I said, wow. Okay. I said, look, I'm having trouble here. I said, let's just do this. I said, how many people here know that there's a division in your corporation that reports these numbers? Not a hand. I said, you notice that I didn't rush out to check the numbers? I said, does anybody starting to get an idea of why? Now, by the way, I've never had that question answered. I don't know which corporations report every month. I don't know where those numbers come from. I have no idea. Do you?
No. Honestly, no. That's perfectly fine. We actually talk about the mystery of these. Well, the Michigan Consumer Sentiment. Do you know where those numbers come from?
No.
Okay, the University of Michigan. They took some college students, came up with a clever idea. They put some students in a phone room and a phone bank and a call center, and they started calling people up and saying, what do you think about the economy? Now, they sold that report. They still sell it to this day. It used to be a high-impact report. It was one of the few economic reports that you could actually buy ahead of time. And University of Michigan used that to fund various, school projects. It was quite a clever thing these college kids came up with, and Wall Street bought it hook, line, and sinker. Consumer sentiment. Yeah, I mean, they would just call Mom, Pa Kettle, at home or at work and say, hey, what do you think about the economy? Well, I'm pretty upbeat.
You know what's most interesting about that?
What's that?
If you're calling them during the day, you're either talking to somebody who's not in the economy,
not working,
or somebody who's unemployed, aren't you?
That's right.
Anyway,
now,
that's again.
Which one of the major reports were you asking those guys about at that meeting?
Well, nothing in particular, but
okay.
but again, you see, if it's durable, it doesn't matter. Whatever it is, somebody's got to be reporting.
Yeah.
At the end of the month, or whenever they do it during the month, whatever it is, whether it's durable goods or whatever the number happens, whatever it happens to be, producer price index, whoever reports those numbers. Nobody had a clue of what I was talking about. Nobody knew of a division within their company. Nothing. Not one hand. I find that very interesting. So I will leave you with that, my friend.
Okay, Garrett, listen, thanks so much for everything. We really appreciate the time that you spend with us on the show each week. We look forward to you every Monday. And, now you wanted to talk this afternoon about setting up this show with Peter. Yeah, you've got my number. Call me at your convenience, and if I'm unable to take the call, I'll call you right back.
Okay, and if you get a window on your end, go ahead and give me a call too.
Okay.
That way we'll know you're free, and I'll do everything. I'll try to be real free this afternoon too.
Beautiful. Sounds good.
Great.
Thank you so
Dwayne.
much.
Thanks so much. Thanks to your audience.
All right. Have a great afternoon.
Okay. You too. Bye-bye.
Okay, guys. Let's see. I think I have a... Yep. I got a personal mentoring session coming up here in 8 minutes. So we've covered all of the markets today in regards to the Concierge Trade Alerts. We had a look at the S&P, all right, which looks like it wants to come down and trigger, on the short side again. Okay, partners, check your weekly trading zones to see where you are at, or where we are at in the big picture, and what the next important number below us is. I think you'll see that we've got quite a ways that we could drop before we hit that number. If we jump over to the bonds, okay, now bonds earlier in the show had triggered only on the upside. Let's see if we got a trigger on the downside. ZBZ short below 154.19. Okay. In fact, we do. Okay, yep. And it's happened in just the last hour. Let's see what we got. 154.19. A little more. There we go. 154.19. All right, we got a swing low. 154.08. So that's 11 ticks. Okay, now bonds pay 31.25 per tick. 31.25 times 11. That's $343 per contract. Okay. Now this was a number that was sent out to the subscribers, to the clients last night. The alerts went out last night at 8:15. There was an error in the first batch, and so I had to resend them. I sent out a correction, went out at 8:15 Eastern, which would be 20:15. So that's why I've highlighted the 2000 hour here. So we traded long on the upside. The upside alert was 155.23, and on the short side 154.19. 19. So some nice two-sided action in the bonds today. If you had your long hat on, fair enough. If you had your short hat on, you're okay too. Crude oil, really the big story. Look at this thing. 46. Okay. First, we took $1,000 move on the downside, and then the markets ran up and triggered on the long side at 47.10. That marked $1,000 per contract in value. At 48.10, that marked $2,000. And at 49.10, guess what? 49.10. Right. Can we get 10? We can. There we go. It's a $3,000 per contract move. Okay. Now, is it reasonable to think that anyone stayed with that trade the entire distance? You know, just ran it and got out right at the top? I don't think so. It's not a skill set I can teach you. I can teach you how to trail a stop, right? But at some point along the way, you're going to get stopped out with some profit if the trade carries you into profit, right? That's got to happen first. So, what does it take if you're trading the 2420 blueprint? Now, you see, this is 100 ticks. This is 200 ticks. This is 300 ticks. How many ticks does it take if you're trading the 2420 blueprint? 10. Not 100, not 200, not 300, 10. 10 makes you your $100 per contract per day. Okay? $100 per contract per day. The goal of the 2420 blueprint is to take you from one contract to 20 contracts over a period of 24 months. Only adding contracts with profits you earned in the market. So instead of blowing up your account, this business model, and that's what this is a business model to help you build your trading business. It has a forward slant, a forward progression. You know, why didn't anybody ever think of this before? I don't know. But how many accounts have you blown up? If you were only adding contracts with profits you earned in the markets, ask yourself this question: would you have blown up the account? If you had stayed in SIM until you were consistently profitable, would you have blown up the account? Maybe you would, but it would have taken a while, right? So, a couple of very simple concepts. When you come on with us, we put the knowledge and the tools at your disposal. The tools are ready to go from day one. The knowledge you have to assimilate over a period of time. This is a very simple methodology that we use. We use the same time frame, same indicators, and same two setups on every market we trade. Nothing changes except the symbol. Okay? Now, if the 4-tick range chart, not 4-tick, but range chart, if you feel that's somehow too fast for you, you can bump that out to 5 minutes, 30 minutes, an hour. Nothing else changes. All the rules, everything remain the same. And the entries are never nebulous, they're never ambiguous. We tell you, the indicator tells you to the tick what your entry price is. Okay? So, not to get rich quick overnight, but when you consider that you can build a business with this much potential over a 2-year period of time, that certainly warrants taking a 1-week look at. And I don't mean a look by just pressing your nose up the glass and staring to see what's going on inside. No. I'm talking about rolling up your sleeves, getting busy, downloading the platform, installing the indicators, putting on and taking off trades for a week. so that at the end of the week, you aren't just saying, wow, well, that's a pretty good system and that guy's a pretty good trader. No, at the end of a week, I want you to be able to say, hey, you know what? This is simple enough and consistent enough that I believe this is something I can actually do. Why do I believe that? Because I've been doing it for the last few days. That's why. All right, guys, got an appointment, got to go, got to run. Reminder to everyone, you do have to go out early tomorrow morning or late tonight and sign up for the radio show. Let me just point you to the page one more time, right here. From any page or the home page at CFRN, click the big microphone. And later tonight, when you click this link, it will reflect the September classes, okay? Or the September radio shows, all right? Okay, guys. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
I tend to, for the most part, preach through books of the Bible. So this December will be 6 years for me. We came in at Ephesians. We did the book of Hebrews. We've done the book of Ecclesiastes. And then when I'm not doing a book of the Bible, I'll tend to pick a topic and